Welcome back to Chartacus. Today's video is about using market beta to your advantage. Let's take a look at this. What is market beta, and how can you use it to your advantage? Market beta, it's an indicator that shows how much an individual stock moves in relation to the market over time. Let me give you an example based on two bouncing balls. You drop the market ball and the stock ball. First, the market bounces up, certain level, and then the stock bounces up, much higher. This would suggest a beta greater than 1.0, meaning more risk and more opportunity, because the stock on average, and generally speaking, will move much greater than the market does. And again, it does mean more risk, but it also means more opportunity. Now let's look at another example. You bounce two balls again. This time the market bounces up high, and then the stock doesn't bounce up as high. And maybe, in this example, it may not bounce up at all. It may just stay flat on the ground. That means it's a market beta of less than 1.0. It means less risk, but also less opportunity in terms of trading with the market. And in truth, there's also still opportunity there, because some of these stocks move independently of the market and they can still be going up when you find them. So let's do a recap. How much more or less does an individual stock move in sympathy with the broader stock market? That's pretty much what market beta is, and how much it does that over a certain amount of time. Higher beta is greater than 1.0. That means the stock generally moves more than the stock market every time it moves. And that means whether it moves up or down, high beta stocks will move that much more. Lower beta stocks, less than 1.0. Stock generally moves less than the stock market every time it moves, or moves completely independently, or moves inversely to the market. How to use higher market betas to your advantage. If the broader market is rising or trending higher, then trading in higher beta stocks means you can make greater profits than the market when you are buying, which means you're going long or you're buying call options. If the broader market is declining or trending lower, then trading in higher beta stocks means you can make greater profits than the market when you're a seller. That means you're a short seller or you're buying put options. How to use the lower market betas to your advantage. If the broader market is declining or trending lower, then trading in lower beta stocks means you can still make money trading by buying stocks that generally do not move the market, or stocks that move opposite of the market, like those inverse ETFs they have, which are designed to make money if the markets are going down, or whatever they follow is going down. Lastly, lower market beta stocks can also serve as a shelter stock during bad or volatile markets, meaning that you can still find low beta stocks that are trending up, but they may not be trending up that greatly, but at least they won't go down in sympathy with the market. So if you're in a full-on bear market, you may want to be in one of these types of stocks. So how to use Chartacus to find high or low beta stocks? First, let me tell you about it. Every night, Chartacus calculates the market beta for every stock in its universe and then ranks them in order from highest betas to lowest betas. Then, Chartacus will split this ranking as equally as it can in 10 parts, and they call those parts deciles. So there'd be 10 deciles. The top decile is number 1, and it represents the top 10% market beta stocks in the Chartacus universe. If you want to find the lowest 10% of the market beta stocks, then that decile is number 10. Now let's see how easy it is to find these stocks using Chartacus. All right, first thing to say is that the great thing about Chartacus is that it gives you just what you need and only what you need. The goal of Chartacus is to reduce the noise. Now let's go find that market beta. To find it, you have to go to the advanced filters. 7th one down in the list, decile market beta. Let's pick the top decile, number 1, and click apply. The list has 1,025 total stocks in the top decile by market beta. And that's about 10% of the 10,000 Chartacus has in its universe. Because the market has been rising recently, let's sort the list by price change in descending order to see who has moved the most as the market has risen. Here's ticker SNOW, which is the top of the list. Let's take a look at it. Big gap up. Must have been some news because it gapped up hard. If you look at the 4-month chart, you'll see this stock moves a great deal. In fact, before this big spike up, the high range was about $130 a share, and the low range was $110 a share. That's $20 on $110, suggesting this stock has moved nearly 20% in this 4-month range. And that's not including the additional $40 it's moved yesterday. Let's compare that to SPY, which is the ETF that mimics the S&P 500 index, the broader market. There it is. Let's go to the 4-month chart. Now you can use the regression channel to get a sense of the range of movement. And by doing so here, you see the current range is from 580 to 606, or a $26 range on 580. 26 on 580 is nearly a 4.5% range on SPY's price, while Snow's range of $20 on 110 is about 18%. This is a high beta stock that moves a great deal more than the market. Also, let's remember how much SPY moved yesterday. 0.54%, or 0.5% for the day, which basically mimicked what S&P 500 index did. Let's pick another one. Reddit. Look at this. The stock has moved $80 in the last 4 months, so another high beta stock. Now, if you limit your list to just NYSE Arca stocks, then you can see those ETFs that are actually leveraged so that they perform 2 or even 3 times better than the stocks they're following. Let's do that and see what comes up. Now we have 224 stocks, likely most, if not all, ETFs that are high beta and have done really well when the market advances. In fact, the first page has stocks that have all beaten the S&P 500 index by at least 10 times its value. Remember, the S&P only increased about half of 1%. Here you go. You got almost 5% here and almost more than 9% up here. And look what else is on the first page of top performers in the top market beta stocks. HIBL. What does it do? It happens to be a leveraged ETF that gets 3 times the daily move of high beta stocks. So you can find lots of stocks to trade that move way more than the market does. And if you can determine if you're in a rising market, then you can make much greater profits trading and investing in these stocks. If you want to know what to buy when the market is decreasing, let's look at the losers when you use the bottom decile market beta stocks today. Because remember, the market went up today. So the bottom ones that are the most likely inverse should be inverse ETFs. Let's take a look. Unclick number 1, click the 10th decile for market beta. Let's apply. And let's sort it from the worst to best. These are the ones that absolutely do the opposite of what the market's done. The market's been going pretty well. And on the first page, what do we have? HIBS. That's the opposite version of HIBL, which you saw in the previous list for top beta. This one right here is an inverse ETF that takes advantage of shorting high beta stocks, and it's triple inverse ETF. So when the market's going down, here's one you can take advantage of. And you don't have to short. You can just buy this one. So use this filter to find those stocks that can give you higher trading gains when the market's going up or when the market's going down. Now, you may be asking, how can I use this along with the high-performing strategy stocks from the Chartacus log? That's a great question. Here's how. Let's start off by resetting our selections. Now we're back to the default view. Go ahead and open the Chartacus logs page on a separate tab. And let's pick a strategy. High-performing strategies, here we go. What you want to have always when it comes to this page is pick those that have an RR, reward to risk ratio, greater than 2.0, and win percentage greater than 70%. Let's go over here. Here's 70% right here. Here's an RR. Look at this one right here. It's a buy strategy called favored momentum, tactic number 52, win percentage of 76, RR ratio of 2.58, then 1,100 trades, 841 wins, and there's 79 new trades today. Let's pick it. Let's hover over it, right click. Let's copy it. Let's go into the dashboard. Let's go to the stock symbols. Let's paste it. Let's apply. Look at that. You got 79 right there as we intended. Now let's apply the advanced filter, market beta. Let's get top market beta. And here we go. Now here's a real easy way. You've gone from 79 to 5 high beta choices out of the 79 candidates from that strategy, which means if the market continues to go up, then all of these should perform much better in relative terms than the market does, barring any bad news or anomalous events for the company. There it is. We hope you enjoyed this video. We hope to see you soon in the Trading Coliseum.